Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis on Thursday, December 11, 2014. Looking at a daily chart of the SPY, and I thought it was an interesting day today because I almost got faked out again. And, fool me once, okay, not fool me twice. I don't think so. So what happened was we shot up early in the morning, all right, and then we just rolled over. And in fact, if you look at the after-hours session, all right, the market trades the SPY, and the SPY trades a normal after-hours session, but the futures trade till 4:15. And once the market closed, the futures sold off the rest of the gains today, and it was down. It was actually negative. So I don't know exactly what's going to happen tomorrow morning, but the VIX shot up, and I'm going to show you the VIX in a minute. But the VIX shot up, and basically the market rolled over even further into the last 15 minutes from 4 to 4:15. So what that tells me, and that's what you're looking at right here. It was down at actually the SPY was down right now. It's down at, let me get the number. It's down at 203.55. We closed at 204.17. We were down about 203, at right around 310, 305, 315, in that neighborhood. 415, excuse me, 410, 415. So anyway, I just thought that was interesting because it shows weakness. It shows that the market is still a little bit weak. And if you go to the daily chart, let's go back to the daily, all right? And what you have here is you had about the same volume as you did yesterday, but, more importantly than how the market opens, right? Open up and then roll over. More importantly is how it closes, right? So we closed on a weak signal, if you will, as opposed to a strong signal. If we close at the highs, that's strength. If we close at the lows of the day or headed towards the lows of the day, that's a weak signal. So that's what that's my takeaway from the market today. And I'm still not ruling out this level here or lower before this pullback. I'm not going to call it a correction. It's just a pullback. But the pullback, before that's over, remember, we're still in an uptrend here, right? If you go over to a longer term picture, all right, this market's still in an uptrend. You can come down to the 20-period moving average at 199.34 right here, okay? You can come down here and still remain in an uptrend. In fact, you can come down here and still remain in an uptrend because the chances are it won't stay there at least into the end of the year. That's my picture. That's in my book right now. That's what my work is telling me, that we're still going to have an end-of-the-year rally. So don't listen to CNBC. Don't listen to the talking heads. It's all nonsense. They just go with what's happening at that moment. They don't know what's going on. It's all nonsense. You just stay with me, and I'll tell you what to expect, and we'll just keep you on the right side of the markets. That's my goal. All right, so let's go over to the IWM. I like to look at that, and let's see what happened there today. Okay, and let's go to the intraday, and we'll just see a very similar picture to the SPY, right? We shot up, rolled over. Okay, when the small caps roll over, it's telling you the market is not ready to rally yet. The market is weak, and it's probably not finished going down yet. Okay, so if you go to the daily chart, all right, however, this is still a bullish pattern, right? We're just moving sideways. This is just chopping around. So as long as we stay inside this day here, this was that big reversal day, as long as you stay inside that day, the market, the IWM, is still going to be considered bullish. In fact, in my book, as long as you stay above the 50-period moving average, but even more bullish would be the 200-period moving average, that's still going to be in a bullish position. Could you come down further? Could you come down to this gap window, this gap fill down here at 111? You could. I don't expect it, but that could happen. There's a chance, and I don't know for sure. I'm just saying there's a chance that you could get a throw up in the morning tomorrow, and I'm going to tell you why in a second here. Because of the energy sector and because of oil, and it's still weak. We're going to talk more about that in a second, but I just want to show you the VIX, okay? Because the VIX today, all right, is up at over 20, okay? And not that 20 is a significant number. It's just that, look at this move just in the last 1, 2, 3, 4 days. From 4 days, okay, let's say 5 days ago, okay, we were down at 11.5 roughly on the VIX, all right? 11, what was the low here? The low was 11.53, all right? We were 11.53, and a week later, we're at 20. All right, that's an extended move. That's a big move. And the VIX, even while the market was up today towards the end of the day, even though it sold off, but it was still up for the day, right? The Dow was up 63, the S&P was up 9 into the close, okay? And the VIX was positive. It was negative earlier as the market was rallying up in the morning. But then, even though the market was up, the VIX went positive. And that's telling you that the market's probably not finished going down yet because there's still fear in the market, which means, and what is the VIX telling you? It's telling you that traders are buying protection in the option market. That's what it's measured. That's what it's measuring. It's measuring the options market put buying, essentially. When the VIX is going up, it's telling you that they're buying puts for protection against a further sell-off in the market. So how high can the VIX go? Probably not much higher. I would say the outside chance of about 22 to this gap window here, and that could happen. But right now, my book, the VIX being where it is, tells me that we're probably closer to either the end of the pullback or maybe we get one more, big, decent down day, and then that'll be it. Maybe tomorrow, maybe Monday, something like that. That's what I'm looking for. We'll see day by day. We'll take it day by day, and we just let the charts tell us what's going on. The charts will tell us what to do, right? If I see a reversal in the VIX, and you'll see a reversal in the VIX normally before you see a reversal in the market. The VIX will tell you ahead of time what's going on. All right, let's move over to the energy market. And first, let's take a look at the USO. And the USO today was down again. Right now, oil tried to rally early on, but then it sold off at the end of the day. And in the after-hours session, guess what? We're down at 59.15. And we're probably, in my book, we're probably going to go lower overnight. And, I've been telling you that I think 60 is a good support, but also that we can go lower. I was looking for a Pierce of 60, and if you remember from last night's video, I'm looking for a capitulation day, a reversal day. And I'm kind of hoping we get that tomorrow. Don't know if it'll happen, but I'm looking for it. So I would love to see oil down $2 or $3 overnight, let everybody get scared away in the morning, and then hopefully we can reverse, whether it's tomorrow or Monday, and then put in some kind of an interim low or short-term bottom in oil. But right now, 59.15 on the price of crude. That's on the January contract, and we'll see where it goes overnight. But USO is just weak. It's just melting away day by day, right? It's just, here's your day. The OPEC massacre. This was Thanksgiving Day while the market was actually closed, but of course the commodities were trading, the futures were trading, and you had that huge down move on the crude futures. Okay, so USO opened up here the next day, and you've just been melting away, and there's just nothing good here. So let's take a look at a long-term chart. And I don't like the long-term chart of USO because it doesn't really tell you anything, but here we are, beyond double bottom. Okay, this bottom here from 2009, all right, was 2274. All right, we're at 2249. So as far as the USO chart is concerned, there's really no support left. It's done. It's over. We can't calculate a support level on the USO because this isn't, while it tracks day to day, it tracks oil. It's not a good long-term proxy for the price of crude. And so that's it. We're done with USO for the time being. Can't tell you anything other than an intraday or day-to-day basis. All right, but all I can tell you is it's melting away, and you're going to have to see a capitulation bottom put in where you have a reversal day in the price of crude, which will also rally the energy stocks. So a good proxy for the energy stocks would be the XLE, which is a basket of energy stocks, right? It's the XLE Spider, all right, and Select Spider it's called. And if you look at, we can look at a long-term chart of this, And where are we on a monthly basis? Okay, we're coming into a really good level of support. And why do I say that? Because from here, you had a breakout, all right? And every time you have a breakout from a level, that's usually going to find support on the way back down. And that's on a monthly basis, so it doesn't have to stop here in the middle of the month. But what I would suggest is that you would close the month somewhere. Their likelihood of closing this month above 71.72 is very, very high. Well, I don't know that we'll get there, but if we get down another $2-3 on the XLE, you're going to look for that bottom in oil, and you're going to look to start picking off some of the oil stocks, and those are the ones that I'm going to be sending out to members on the trade alerts. And I'm really using this as a proxy because I see this breakout point as very, very good chart support, all right? And look what happened here. You cut through the 20-period moving average. You cut through the 50-period moving average. That is very, very bearish. So do I think that this is going to hold for years? No, I don't. But I think it will hold for a while. Probably will hold for a few months. That's my best scenario, my best guess scenario, only because this is a monthly chart. If you want to take a look at the weekly chart, it just looks very, very weak. You cut through first you challenged the 200-period moving average, bounced up, looked pretty good, came down, was support again, and then, the next week you just cut through it, and that was the end of it. So, where's that level here? That level is here where, well, this chart support exists. So I'm anticipating that this will hold based on the monthly chart down here at 71.50, 72, in that neighborhood. All right, I'm anticipating that this is going to provide good chart support. We'll see if I'm right. I just feel like we have to be coming into some kind of a short-term bottom in oil. And like I said last night, you're hearing the talking heads. I heard $42 today for the price of crude. That may happen sometime in the future, but that's not going to happen on this move. Okay, that I'm pretty sure of. From this move, okay, even from this period, from this period here, from 88 on the XLE, that would put the XLE down here at $62, $60 if we went down, or worse, maybe 50 if we went down to 42 in the price of oil. That's not going to happen anytime soon. Markets don't go in a straight line. They're designed to fool everybody, and they certainly fool the professionals. And the professionals are the one telling you, the so-called professionals are the one telling you, $42, $45, $40 in the price of oil. That may happen sometime, but that's not going to happen anytime soon. So the more people on the one side of the boat saying oil's going lower, you want to be on the other side of the boat waiting for it to tip back the other way, and that's what's going to happen. Just a matter of when, whether it happens tomorrow, whether it happens sometime next week. We'll see, but we're getting close in my book. So that's about all I had for tonight, folks. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.